We continue to decode the SK system strategy in this fourth episode. After we explored the WCL area in detail in the previous episode, today in this segment, we will also delve into a very important area similar to the WCL area, considered one of the best entry points for small capital holders, which are the BC areas. What are the BC areas? How do we identify them? And what situations should we be cautious of? We will learn all of that in this segment. Alright, the first thing we need to understand is what the BC areas are. BC areas are correction zones for BC waves only. Okay, now let's go back to the beginning so we can understand the PC zones and the difference between them and the WCL zone, because most traders have noticed that they confuse the PC zones with the WCL zones. The BC zone, as we said, is a correction zone for the entire wave from 0 until reaching the larger target, which is the C zone. The entire correction of this entire wave is the WCL zone. This is why it's considered a wall from which the market can bounce. So what we initially did in previous episodes was draw a Fibonacci retracement like this. Okay, at peak A. Then we identify the golden zone where the market is supposed to correct. Okay, this is my golden zone, which is point B from which the market will correct. Okay, now that I've identified the correction zone or the golden zone from which the market will rise to target C, I bring in the Fibonacci extension like this and then draw it on point 0 AB as we learned. All of this is to determine the target, which is the C area. Okay, as you can see, this entire golden area is the C point. My question to you now is, will the market move in one go from point B to point C, which is the golden area now visible? Of course not. The market will move in the pattern I've drawn with fluctuations. Why? Because the market needs liquidity to reach this target, which is relatively far from point B. The other thing I don't want you to forget, as we said in the previous episode, is that my confirmation that the market will reach my C point is that it breaks the A peak. This is how it looks. That's why I drew it here with a dashed line. When the market often breaks through peak A, it usually doesn't continue upwards directly from point C like this, but rather makes similar moves. As I said, to take liquidity, this is where the BC points come in. These are opportunities to strengthen my trades until I reach the target, which is zone C. How do we identify BC zones? In short, BC zones are drawn by taking the Fibonacci extension and projecting it solely onto point BC. Here, we identify the BC zone retracements. Now, to easily identify the BC zone, I take a Fibonacci retracement and draw it on the BC zone. This is my golden zone. It is the correction I can enter through. The market is completing a new wave, 0 ABC. This is simply how to draw the BC point. The signal I gave is for a bull market. Also, in a bear market, it's the same thing. Here, the WCL zone. I just drew it to show you that there's a difference between it and the BC zones. The same goes for a bear market. As we said, using the Fibonacci retracement, we identify the correction of point B. After that, the market breaks the peak A to continue to the area C, which we determined using the Fibonacci extension and applying it to these 3 points. Well, the market, as I said, and I repeat, moves in waves like this. These waves help us identify the most suitable entry points, especially for small traders. Now, in a situation I want you to pay close attention to, most traders fall into this trap. This case is as follows. In short, see with me, what is strange in this case is the breaking of the peak A. The fracture was not as it should have been. It was only a small fracture of the A top. So in this case, to identify the BC area, would I draw a Fibonacci retracement on the BC area? Is that correct? Of course not. This is not correct in this case because this break was not sufficient for peak A. Therefore, the Fibonacci retracement will be drawn from the beginning of the wave to a certain point higher, which is the point the market has currently reached. Then I identify the golden zone, which is the correction zone. So in this case, all of this is considered a wave. I hope this idea is clear enough. To save you the long video, I'll leave you with the application. See you in the next episode of the SK Strategy course.